So welcome everyone once again. Good afternoon and good evening. Welcome to today's event on blockchain for cross-border payments, connecting the fragmented world. The event is co-organized by INATBA on behalf of the Finance Working Group and by the European Blockchain Observatory and Forum. The event aims to discuss the most essential facts about utilizing blockchain for cross-border payments, showcasing some of the latest use cases, and also discussing the opportunities and challenges, among other things. Before I give the floor to our first speaker for the introductory remarks, I would like to go through a few house rules. We will aim to have this event for approximately 90 minutes up to a maximum of 2 hours. Please note that the event is being recorded and the recording will be available on the website of UBOF and INATBA after the event. And we will also share it via email with the participants. I would kindly ask you to stay muted during the event when you're not speaking. If you want to ask a question, please raise your hand and please turn on your camera as well. You can also ask questions in the chat function, and we very much encourage you to ask questions during this event. I would also like to ask you if you could state the name of your company in the description of your name, just that it allows for better discussion during the panel, should you be asking questions. And lastly, I would like to mention that we will have presentations at the beginning of this event, and it will be followed by a panel discussion and combined with Q&A. So without any further delay, I would like to give the floor to Jan Klesla to give his introductory remarks on behalf of the INATBA's Finance Working Group. Jan is the co-founder of Blockchain Republic, and he's also the director of Institute for Digital Economy of the Czech Republic. He has extensive experience working both for private and public sector, and he focuses on digital transformation of economy and regulatory issues with special interest in newly emerging economic models. Jan, the floor is yours.
Good afternoon and warm welcome to everyone. Thanks for joining us today. Actually, as the Finance Working Group of INATBA, we have been quite, let's say, busy last 2 years working on MiCA and other, let's say, regulatory frameworks in the EU. But the cross-border payments are also quite an interesting field. Honestly, for me, it's even more interesting than NFTs or such a let's say fancy stuff today. Let's say to have some numbers. For instance, the SWIFT network just last year announced the new peak, about 50 million messages per day. So this is one of the largest financial industries in the world, and basically it's one of the best use cases for blockchain in general. So this is basically the reason why we are organizing this event. Thanks a lot to Bara for being the soul of this event, and welcome to all our guests. I'm especially looking forward to the discussion, so please ask the questions. We agreed to prioritize the questions you're gonna ask, and we will ask them first. So I will not delay this anymore, and just looking forward to the discussion that will happen probably around 5 o'clock. So please prepare your questions. Thanks a lot, Bara.
Thank you so much, Jan. So I would like to continue further and give the stage or the floor to our first speaker with a presentation. I would like to welcome Mr. John Ho, who is the Global Head of Legal at the Financial Markets for Standard Chartered Bank. He oversees and provides legal advisory, transactional and documentation support for the bank and its branches and affiliates. John, welcome, and the floor is yours.
Thank you. Just checking whether the mic is fine.
Yes.
Okay, okay, thanks. I will start shortly. Just let me know whether you can see my slides.
We can see your slides and also the side slides.
Okay, let me blow it up. Is it okay now?
Perfect.
Okay, thank you. Thanks, Jan. Thanks, Bara. And I'd like to before that, I'd like to thank INATBA for inviting me to speak today or to share sort of this sort of experience and journey in terms of blockchain for cross-border payment. Just before I start, just a quick introduction. My name is John Ho. I'm currently the head of legal for financial markets for Standard Chartered. And just one caveat that the presentation I made today are my own. They do not necessarily represent the views of the organization I represent. So with that, lots to cover. I would like to sort of set the scene in terms of cross-border payment. So in terms of cross-border payment, looking at what the issue are is costs. So the average transaction fees for cross-border payment under the Payments Journal is showing that it's an average of 7%. Now, for certain types of emerging markets payment, the cost of cross-border payment can even exceeds double digit. So 7% is just the average. So you could see it's quite a prohibitive cost for cross-border payment right now. The second thing is speed. Unlike sort of peer-to-peer exchange, blockchain, but cross-border payment using traditional rails at this point, on average, takes 2 to 3 working days for payments to flow through from one jurisdiction to another. Second point is savings. Juniper conducted a survey in 2021 that says that the savings for global banks, if they modernize their payment rails, including using blockchain, could equate to $10 billion in saves. Then Ripple did a survey recently, in about a year ago, in terms of interest in cross-border payment using sort of blockchain payments. 99% of the respondent positively said they would like to use new forms or blockchain forms of payments. With that backdrop, let me look at what are the 4 sort of main challenges with respect to payments. So FSB is undertaking what we call a G20 roadmap, and a number of international setting bodies have actually looked at how do we address these 4 challenges. Costs, as I've shown you in terms of background. Speed, based on example, it takes 2 to 3 days. Access, not many people with no credit history can access financial services to make cross-border payments. Henceforth, there's now quite a number that are using unregulated service provider to make payments. Henceforth, there are a lot of hidden costs. Transparency. These are the 4 main changes, by all means exhaustive, but these are identified by FSB as key 4 sort of things that need to be addressed. So with that, moving on to the next slide, just checking, is costs. So when we talk about cross-border payment, one shouldn't forget there are costs involved in the normal payments. There is obviously compliance costs, let's look at FX costs if you use correspondent banking, network management costs, overhead costs. So there's no such thing as a free lunch. There is a cost in cross-border payment to date under the existing payment rails, where we use multiple intermediaries, multiple network correspondent banking. And these are fees that are indicated by SWIFT, one of the obviously the key players in global payments. Next slide talks about speed. Why speed is important? Again, SWIFT did a survey. Speed is important for not just the customer experience, intraday liquidity, exception to investigation, customer service, treasury reconciliation, intraday liquidity, and accounting reconciliation. These are key, and it's important why speed and having the ability to look at real-time positions and exposure is key. But when we talk about cross-border payments, one needs to look at the moment, the world is such that there are many interlinkages. There's no one-size-fits-all approach. In the BIS report in July, they've actually indicated the linkage to the world of cross-border payment could come in single access point, hub and spoke model, common platform, and interlinkages link. Now, the number of policymakers are basically taking on cross-border payment as an issue to be tackled, given the challenges that I described, given the cost involved. ECB have also issued a paper very recently looking at what is deemed as the sort of ideal state of the holy grail of cross-border payments would look like. Similarly, you have IMF, you have BIS, you have FSB, and also you have private enterprise such as Ripple, R3, looking at providing solutions for cross-border payments. Now, how is cross-border payment different from normal rails? At a very simplistic sense, what you look in this example is in a traditional payment sense, a cross-border basis, one relies on a web of intermediaries, in particular correspondent banking. In markets where banks do not have a presence in a cross-border jurisdiction, they rely on correspondent banking. As we know, there's been a decrease of cross-border banking globally given the challenges with AML, KYC. Henceforth, costs have gone up, not gone down. So there is an ability in a carefully designed blockchain-enabled infrastructure to provide for a direct end-to-end payment using smart contracts, programmability, and a well-designed private or even a public within a private permission network to provide for data of payment to be made on a cross-border basis using tokenized or atomicity of tokenized cash or tokenized deposit. Now, looking at the players out there, who are the players right now looking at DLT border payments? There are banks, central banks now trialing and looking at tokenized retail CBDC, tokenized wholesale CBDCs. You have big tech, fintech looking at fiat-based stablecoins, atomic swaps of tokenized coins. So these are the sort of four key players, by no means exhaustive, that are looking towards tackling the sort of pain points in cross-border payments. Blockchain-based payments, beside improvement and modernization of existing payment rails in the US, FedNow service, the expansion of metaverse or Web3 payments is likely to sort of increase the adoption of digital forms of payment, whether it's e-money, stablecoins, CBDC, or privately issued stablecoins. These are obviously potential, besides CBDC, other forms of digital forms of payment or exchange are already being used in the marketplace, especially in a sort of decentralized or in a crypto ecosystem. Now let's look at use cases. The first use cases that we talk about is a use case that came out a couple of days ago, which is a retail CBDC involving Central Bank of Norway, Central Bank of Sweden, and Central Bank of Shekel. What they were trying to address in a POC is exactly what I've just described: cross-border payments pain points, which are plagued with high costs, low speed, limited access, and insufficiency in transparency. So Project Icebreaker is a collaboration with 3 central banks to provide a hub to which participant central banks can connect their domestic proof of concept CBDC system and henceforth enable immediate retail CBDC payments across cross-border in Europe. Case number 2, Project Helvetia. So there is obviously Project Helvetia 1, and then Project Helvetia 2 looks at a number of transactions in Swiss francs, interbank, monetary policy, and cross-border payments using DLT. And the studies have shown that the results involving commercial banks, such as we have in Europe, we have Credit Suisse, you have Bank, Letzberg, UBS, have been involved in a successful implementation or trial of a cross-border payment using digital tokenized assets. You also have tokenized deposits. For example, JP Morgan Coin is one example that is currently being deployed, where it's not a stable coin, but it's a tokenized form of money. Then in commercial sense, you have Project Patio. So Project Patio came about as a result of collaboration out of Project Ubin in Singapore under MAS, where we have JP Morgan, DBS, and Temasek creating a platform to develop and accelerate interbank value movement for payments, for trade. So what they're trying to do is disrupt cross-border payments. So it's already live with Sing dollar and US dollar last year. This year, 8 currency and is selected to be onboarded by 2022. So this platform is already a live deployment. Let's look at other central banks projects. So this is obviously a snapshot. It goes to show that there's a number of CBDC projects involved by central banks looking at how do we solve or how do we enable cross-border payments. So a number of proof of concepts, a number of trials have been deployed across the globe, looking at interbank settlements, lowering the cost of transactions, and also enabling cross-border payments such as MCBDC bridge. Well, so what are the barriers still in terms of the adoption? So the barriers to date, based on a recent survey, you still have regulatory uncertainty. What is the status used with respect to some of these tokens? Are these cash? Are these treated as legal tender? Are these treated as crypto assets? So lack of trust, and also interoperability challenges with walled garden systems and inability to scale for some types of technology. Obviously, the technology have matured in depending on the types of technology adopted, but these barriers are not insurmountable, provided private and public sector get together to address some of these concerns. CBDC projects globally, as I mentioned, there are 91 CBDC projects in deployment. 3 have been deployed live in a phased fashion, and a number of transactions are being deployed on a phase of proof of concept basis. So this provides a snapshot in the BIS implementation. 86% of central banks globally are doing some form of a CBDC trial. Most of them are looking at cross-border payments in some form of fashion, either in collaboration with other central banks such as Project Dunbar, Project Helvetia, MCBDC Bridge. These are some of the projects that are currently being deployed for implementation in the future. So look at what are the key areas we need to solve. We need to look at speed to be addressed. As I mentioned, right now, the cross-border payment is slow. You need to have frictionless experience in cross-border payments, similar to domestic payments and how payment is like with mobile money now. Your business model needs to be agile. There must be a proper and well-designed payment infrastructure. Digital experience, UI, UX is key for customer adoption. Last but not least, you need a well-designed, resilient blockchain technology. Because right now, as I mentioned earlier, some types of blockchain technology do suffer from scalability. For those public blockchains that rely on proof of work, it does have high gas fees that need to be addressed. Now, looking at what are the key requirements to achieve a utopian state, we need strong governance, data controls, compliance with regulatory requirements, standardization in messaging, because as you know, the SWIFT is actually undertaking a project, ISO 100, to actually implement a global standards in the future where blockchain could be deployed as on a platform for a standardized messaging payment system. Digital identity is key. As we know, in Europe, there's a framework to create a digital identity. In future, for payments to be made on cross-border basis, a verifiable digital identity forms a core pillar towards cross-border payments. You have security, reliability, and I mentioned last but not least, scalability. The throughput is key to ensure a wider adoption of these ecosystems. So where are we in the sort of future of cross-border payment? Now, have I painted in this picture, the direction of travel is clear, that the modernization of financial payments is a direction that everyone is embracing. At this point in time, we are still in a journey, as I explained to you, in terms of trying to resolve some of the key challenges in the market. But I think on the optimistic side, one, we need to know that the international setting bodies, especially with G20, presenting its finding in the next G20 meeting in October of what the future of cross-border payment will look like. It require a cross-collaboration between private and public sector to actually make it a success. I think with that, I hand over back to Bara. Thank you.
Thank you so much, John, for the presentation and for giving setting the scene for the topic as well. I would like to continue with our second speaker, Mr. Antonio Leal Batista, who is the head of project pipeline in the blockchain technical team. He is managing projects on the blockchain network related to self-sovereign identity, customs, procurement, cross-border payments, digital money, domestic violence, quantum resistance, securities, supply chain, and academic diplomas. Antonio, the floor is yours. Thank you so much for being here.
Thank you, Bara. Thank you very much. Hello, everyone. Just a second to share my screen. You see my screen?
Yes, yes, we can.
Thank you very much. Well, thank you. In the name of IDB Lab and LabChain, we are basically the largest public permission blockchain network in the world. This is an initiative from IDB Lab and IDB Group, which basically contains IDB Group and IDB Lab. So LabChain is basically a global alliance for the development of the blockchain ecosystem in Latin America and the Caribbean. LabChain has been running since 2018. We just switched to our mainnet environment. We've been working for a protest environment for the last 3 years successfully. Now we have a mainnet environment where basically we're moving a lot of applications, and we'll still have a protest environment where there's a lot of applications that are taking place and are being developed in a suitable environment for testing and development. We have a lot of projects going on, more than 50 projects in different areas in nature. I just wanted to note that in financial inclusion, we have the cross-border payments application, which this is the proof of concept we developed in 2020 with collaboration with Citibank. So basically, I am head of project support at LabChain, and I'd like to describe, after John's great introduction about cross-border payments and where we stand right now. Well, basically, I would like to describe the experience we had at developing this proof of concept. Basically, our agenda will go through a background, our goals, how we achieved this, our findings, and our next steps in this. So basically, our background is IDB has regional offices all around Latin America and the Caribbean, and there's thousands of annual transfers from headquarters to local providers for the development of projects in different areas. All these transactions, all this that involves transactions, having intermediary banks and having FX rates that are involved and beneficiary banks. So basically, these scenarios have high transfer costs. There's a lot of transactions that take place. Return payments can have astonishing high fees and basically no traceability of transfers, of the status of transfers. And there's usually no control of processes and fees that are involved. So what we try to do is using Citibank's payment system, which we usually use for transfers. What we did an integration with the LabChain blockchain network to achieve transactions and find if we could do traceability and reduce costs and time of what is usually a cross-border payment. So, and our goals were basically, as I mentioned, demonstrate that the blockchain technology is suitable for performing cross-border payments, have increased the traceability of transactions, intermediaries, and costs, and have a better idea of what are the fees that could be involved. This proof of concept was carried out on the LabChain investment network, which is basically the flavor that we had at the protest net at that time. And we integrated the LabChain blockchain network with Citi's WorldLink payment system with their API to basically perform several transactions using cross-border payments. So how we did this is in 2019, the IMF distributed this taxonomy of digital money. What we did is basically, as John was mentioning before, we were looking to tokenize money so we could do a tokenized transfer between headquarters and some regional office of IDB. So we selected Dominican Republic. So we created a couple of stable coins, what would be classified as B money. B money would be a fixed value redemption on the type of value. It would be basically backed by governments. It's a stable coin, and it would be basically, it could be decentralized or centralized on the nature of the application that we would like to use. So basically what we did, we tokenized these stable coins using ERC20 tokens. We actually did an extension of the Ethereum ERC20 tokens using a standard called ERC 2020, which is e-money token standard, and basically adds some features that are not available with the ERC 20 token and more suitable for the financial industry. So when we were designing this proof of concept, basically we selected two stable coins, as I was mentioning, one linked to the US dollar and one to the Dominican peso, so we could do this the cross-border payment. And we stress a lot on doing the KYC and AML processes that would any financial institution perform. So besides using a blockchain-based identity, these users had to go through a KYC and AML process to be able to be whitelisted, and their accounts would be whitelisted actually to have these stable coins and being able to tokenize money from their accounts and turn it back to fiat money at any time. Okay, so we built an application, a container-based application. We have basically a front end and a back end. Users will use their, it's a web-based application where authorized user, which I whitelisted, can actually transfer money, selecting any registered account that they have, and we'll go through Citibank's payment system. So this is a bit of the architecture. We would integrate with the Citi's WorldLink API, and we would record all the transactions in our blockchain network using proof of authority consensus that we have in place. Okay, so basically this is like a screenshot of what an operation would look like. We did a state machine using different states of what the transaction would look like. So this is on the right side. This is how a transaction for a payment, a cross-border payment would take place. This is state 0, where basically there's an FX rate inquiry where we would on the fly actually query the WorldLink's Citi WorldLink's API. We would obtain an FX rate and would decide that actually how much money would be transferred from headquarters to the Dominican Republic. Once this operation is initiated, we have a synchronous response where the payment is initiated, and we change to state 1, where the operation is approved. In this case, we would have some kind of an administrative user that would do an approval, but basically that was only for KYC and purposes. And then after the operation goes in the payment system, we would have an asynchronous response where we could query the API and have the status of where the payment takes place. These are usually operations that are not very, these statuses are not easily to take place and record. So there's a lack of traceability and information about how the FX rate, which FX rate was chosen, how the transaction would take place, and which would be the status of the transaction at a determined time. So as you can see, we map these states, and as you see on the left side, which is a screenshot of how the operation would take place. Well, basically, we would have a traceability or the movement history of the different transaction operations that take place. So when it was requested as a 0, when it was approved, and when it was executed. And basically, these are sender and recipient details as DLT addresses where the money would be transferred from one point to another. Okay, so what did we find basically after performing this and having successful cross-border payments through the payment system and basically having traceability on the blockchain network? Well, we found we reduced time whitelisting accounts, tokenizing money, obtaining FX rates, generating payment, having a payment approval and transaction payment. And of course, all of this would have an impact of reducing costs after performing the transactions. And in terms of traceability, we'll have payment transaction, we have a high traceability of where the transaction is taking place. All the KYC and AML operations on users are registered as well, and FX rates are as well in terms of traceability. We have information of how it performed. What do we find as challenges and opportunities? And John mentioned one of these, and there's still a long way to go on this, and we're working on it. Well, basically having more emphasis on blockchain-based identities, perhaps optimizing the transaction throughput and the fees, having an optimal key management, working on models to optimize resource distribution, perhaps having specific purpose settlement networks. That's something that I'll mention in the next slide. Of course, being compliant with the legal frameworks and any regulatory policies that can take place. We also worked basically at the same time we were developing a proof of concept for quantum safeness on the blockchain network. So we can actually mention that we were successful having a cross-border payment solution that could be quantum safe in a very short future. For financial institutions, we think the challenges are in KYC and AML of these blockchain-based identities. Of course, this was in a sandbox and in a reduced environment, but that's something that has to be taken into account. And perhaps how to integrate to enterprise application integration with core financial systems, having FX rates on the fly or on-chain FX rates, something to perhaps explore and see how that could work. And of course, this would all have new business models that could be developed and have the opportunity for inclusion and new business models for social and impact. For end user adoption, well, basically, digital wallets is something that it has to be considered in the short future. We're also working on that and having a proper usability for end users. So we've been working now, and basically here at the end, this publication of cross-border payment of this experience that I'm describing. What we see now is that after having a successful cross-border payment proof of concept, we're working on having a settlement or having specific purpose networks that we could do commercial applications and have a settlement network. So what we're currently doing is working with tokenization, not a cryptocurrency, only working on tokenized money, and actually having the opportunity to have what will be a finality type of user where actually money can be minted as it could be a central bank, and having the opportunity to have a commercial network where operations will take place, and perhaps as a side chain, and having a settlement network where all these operations could be settled in real time and achieving a lot of speed and perhaps increasing throughput for cross-border payments and these types of transactions. Well, just to mention that actually we have a monitoring system. So it's the largest public permission network in the world. We have different systems actually that take place when these solutions are deployed, so we can monitor the performance and the usage of resources. And we're also an environmentally friendly blockchain network since we're using a proof of very consensus protocol, and we're a carbon neutral type of blockchain. And there, I think I cover the presentation, and I'll hand it on over to Mara. Thank you very much.
Thank you so much, Antonio, for your presentation. And finally, I would like to give the floor for his presentation to Dan Weinberger, who is the founder and CEO of Morphos Network. The company is active in the global supply chains, and the area of his expertise is in international relations and logistics. Dan, the floor is yours. Thank you so much.
Pardon me about that. How's my sound, by the way? Everything sounds okay?
All good.
Mm-hmm. All right, excellent. And you can see my screen as well?
Yes, perfect.
Excellent, thank you. As Bar had mentioned, my name is Dan Weinberger. I'm the CEO and co-founder of Morphos Network. I'm also a UN supply chain expert, and I taught a UN masterclass actually just last week as well. So really excited to be here today. I thought the first two presentations were amazing. I'm glad that the presentations are quite different than what I'm presenting today. John, your overview was amazing, and Antonio, your specific information on LACchain, very informative and very impressive as well. My agenda is more so talking about cross-border payments as a part of optimized global trade in general. I want to talk about the problems in global trade, the importance of data portability in order to enable these cross-border payments. I'm going to go over the solutions overview, banking the unbanked. John gave some great examples of doing that. Interoperable data implementations. We'll go over some of the technology involved. I won't go too deep into that as well. I think both John and Antonio did a great job of that. And we'll talk about the global impact and sustainability and things to look forward to as well. So why are we all working on optimizing global trade here? So supply chain inefficiency is the #1 world problem to solve in order to stimulate economic growth. This is a $2 trillion opportunity. This is a statement directly from the World Bank. So when we're looking at a general supply chain and what the World Bank is speaking about, this one simplifies the supply chain going from an exporter to an importer. A lot of you guys are familiar with this sort of flow as well. But what we're looking at here is a simplified version of a single supply chain when there are really a lot of extra stakeholders involved in the supply chain and different flows which make this one flow happen. Breaking down the 3 flows, we have the flow of the physical goods themselves, the flow of the documents and the services, and the flow of the money. Obviously, we're focusing a little bit more on the flow of the money with those cross-border payments, but all this data works together in order to push ahead global trade, in order to optimize and automate all these different steps. They have to be able to speak to each other through interoperability. We'll get into that as well. So what are we finding out in the world right now when it comes to global trade? Semiconductor shortages, globalization in general. We're seeing there's so many disconnected systems down the supply chain, a whole bunch of communication gaps in the supply chain as well, different stakeholders. Software is quite inflexible if there's any software at all. There's a lot of manual, error-prone activities going on in the supply chains as well, a lack of visibility, scattered complex information, and of course, ETAs, customer demands suffer because of that all. And what we see in supply chain management software as well, when it comes to data management, in order to optimize global trade, in order to automate something like a cross-border payment, we have to have interoperability between all the different data, all the different systems involved. Right now, there's a lack of communication between the stakeholders, but also between those systems themselves. They don't speak to each other. They're complete data silos, and that slows down the entire world of global trade. All these different manual processes, error-prone, as we mentioned, and also missing trust in the authenticity of documents and also the authenticity of a transfer. So what we need basically is a binding glue for all the different fragmented data in supply chain, whether we're talking software systems or stakeholders. So my company, Morpheus Network, what we do, we're a middleware. We actually take all the different integrations that we have in our platform and map all these different supply chains in order to automate all these different activities. What we're able to do, once again, when it comes to cross-border payments, is taking data from one system, which is necessary for that cross-border payment, in order to push ahead that payment based on the data that's already in the supply chain. I'll show you a little bit more about that as well, but to keep it very simple, for example, a purchase order, which has the buyer and the seller, the commodity, the cost, so on and so forth, has over 90% of the data required in order to send off a wire transfer. We can take that data from a PO, integrated from an ERP such as SAP, and then push that ahead to a payment module in our platform as well. We'll show you a little bit about that in a little bit. So interoperability, this is the ability of computer systems, different softwares to exchange information and communicate with each other. Without interoperability, there's so many different manual processes that have to take place. We just talked to a company last week that has 43 different IT systems in their own personal company itself. That means 43 different systems that have to communicate with each other, a ton of interoperability that has to take place. In order to communicate with their payment module, if they want to send off a payment, they're going to need to pull data from different places, many times from different stakeholders, as well as different systems as well. So what would a solution overview look like? We actually have a partner called Access Pay. It actually won the Swift GPI award in the past. It actually allows us to do Swift-based transfers based on the data that we're pulling into our platform. So we have a company that's integrated into our platform, whether we're pulling data from their PO, an ERP system, whether it's even more manual, like manual entry, a CSV upload, getting all that data needed in order to send off that wire payment through Access Pay through the Swift network. Absolutely crucial in order to have that interoperability. What we're able to do is set up a shipment, set up a supply chain, and then have that payment, a part of those 3 different flows, line up perfectly in order to release the goods on time, in order to cross-border compliance on time as well, to get those ETAs back to where they should be. That's all well and good. That's all well and good. We can pull all the data. Obviously, there's a lot of digitalization that has to take place with companies all around the world, but 1 in 3 people, John definitely touched on some great solutions for this as well. 1 in 3 people in the world do not have access to traditional finances, do not have banking. That's a scary thought. Looking at the map over here, you can see, actually, this is some old figures over here. But once again, you can see 63% of the sub-Saharan Africa adults do not have financial services. In North America, it's only 6%. So myself, I feel like we don't feel that as much as many other places in the world. Pardon me. But there are solutions for that as well. What we're looking at is two different systems. John did a great job describing this as well. Right now, we have a centralized banking system, which basically the SWIFT payments, those SWIFT messages have to go through the centralized banks. There's intermediary banks, the banks have to communicate each other. But bottom line, the people interacting, the companies interacting with those banks have to have access to financial services, right? In a decentralized peer-to-peer network, all the different actors, all different stakeholders can actually send funds peer-to-peer directly to each other. They don't have to go through those intermediary banks. They don't have to use that centralized banking system in order to send funds, in order to push ahead their global supply chains. What we're seeing is that 31% of the world, which is unbanked, has this brick wall connecting it to the centralized banking system. And 31%, if they have an internet connection and a device, they can actually connect to these centralized systems. Obviously, there's many different pay systems out there. John touched on the Bitcoin network. You can use Ethereum, for example. But once again, this gives access to 31% of the world in order to push ahead their payments, in order to push ahead their supply chains. And the technology which allows this to happen is blockchain, right? Blockchain itself, it's critical for third world nations in order to interact with all the companies in the first world nations in order to bring up their global trade, in order to make it a level playing field in a sense, but then actually communicate via fund transfer in order to push ahead their supplies. Let's look at some implementations. It's all about the data portability, pulling data from these different systems in order to push ahead a payment, in order to push ahead the whole supply chain. So giving this as an example over here, we have an integration with Customs Direct. They're a customs broker partner. They're actually located in the United States. What we've done with them is automated the complete process of customs clearance, right from the material being picked up at a warehouse in Canada through customs border protection right into the United States. You can see all the different steps involved, including a PAPS number, which is a clearance number. All this is automated steps, including taking the data from the original shipment in order to push ahead with the buyer and the seller with an actual payment based on the data from this supply chain. Customs Direct, of course, doesn't handle the payment itself. They're part of the customs clearance, allowing things to happen in an automated fashion cross-border. But once again, customs compliance and the data related to customs compliance being interoperable with our Access Pay payment system, great collaboration right there. Another great implementation we have is for certification. FCL, Federated Co-op, is one of the largest companies in Canada. They actually provide food to over 1,400 retail facilities. We actually won the PTAC prize for supply chain excellence along with FCL last year. That's for this automated certification system. We have all their suppliers on our platform. Based on having all the suppliers on the platform, we have all the data from the suppliers as well. Connecting the data from those certifications to the payment systems as well is the logical next step as well. So once again, it's all about that data portability, all about the interoperability of these different systems, being able to pull data into one place and then use it as required. Another implementation as well is for port management. One of our clients is Gulf Tainer. It's the largest private port operator in the world. We have an API hub allowing them to communicate from their TOS, the terminal operating system, to their TMS, their transport management system. Once again, we're seeing this interoperability of data, let alone optimizing the port. We can also take that data and put it ahead for cross-border payments as well. Interoperability between the data is just so essential, no matter if we're talking ports, certification, cross-border compliance, all used for the same basic PO data in order to push ahead an international payment. Another great implementation we have as well with tons of data available is our implementation with Marsh. Marsh is the world's largest insurance broker. Basically, we have a one-click insurance certificate solution with Marsh. Once again, the data required for insurance, once again, parallels the data required for an international payment. Those interoperability between systems, whether we're talking insurance, pushing ahead to global payments, very essential as well. And what tech should we be looking for over here? I know we've talked about various blockchain technologies, different cryptocurrencies, countries themselves trying out their own tokenized sort of arrangements as well. Regardless of what companies or countries or whatever is implemented, it has to be easy to use. There has to be some automation involved where you can pull data from different systems in order to push ahead these payments. But once again, if users are not able to use the systems easily, no one's going to use them, and that's going to hold back adoption the entire time. Once again, looking at blockchain itself verifies the transfer and ownership of funds, of documentation. When you're sending funds from one place to another, you can cryptographically verify those funds have been transferred. It's some cases, as Lakchain mentioned, they have those permission systems, but if something is completely viewable, once again, transparent, unless like the Bitcoin network, you can see a transfer happening, and whether you're the sender or the receiver, you can feel confident once again that those funds have been transferred and they're sitting in the proper locations at the right time. Once again, it's all about having that dynamic data, pulling the data from different systems in order to push ahead, whether it's a cryptocurrency-based payment, SWIFT-based payment as well, all having confidence in the data as well. And the tech stack moving forward, I can't say it enough that interoperability is so key. With so many different systems involved in supply chain, IT systems and stakeholders, we need the data from these different systems to speak to each other in order to automate any payments and optimize global trade in general. This goes for digital documentation as well, pulling data in order to create these documents, as well as having that immutable verification trail of all the transfers, whether it's payments, document transfer, so on and so forth, all related to supply chain. And as well, having reporting systems so people can actually have a knowledge on what's going on in the supply chains, also very essential as well. Pardon me. Key criteria to look for going as we go to the future, right? We want ease of integration. I mentioned that you have to be able to integrate more systems. I mentioned that one company with 43 different IT systems, if they're going to add number 44, you have to be able to integrate that system into their company structure. You have to be able to trust the data as well. Mentioning, of course, that blockchain backend for notarizing secure data. That gives that trust on both ends, whether it's a transfer or whether it's documentation. You have to be able to trust the data. And once again, being adaptable, not only IT systems, but third parties being able to integrate their systems into the process as well. And it's all about that ease of use in order to have the adoption that we require. Now let's go through Morpheus itself. This is our middleware platform, Morpheus Network. Once again, we have the data that's brought in from an ERP. We have an integration. We have a partnership, I should say, with SAP, or the part of an SAP co-innovation program. We're able to pull data directly from an SAP ERP in order to populate the shipment details. Moving ahead, once we have that data, we can use that data interoperably through our workflow builder, setting up different modules. In this case, we have a QR code scan. This acts as a simple trigger to push ahead the supply chain. And in this case, we only have two modules, QR code scan and then a payment, which we could arrange as we needed. And after that, after that scan happens, it's going to push ahead the next module. But this is the configuration of that payment itself, asking for the name of the source, the name of the beneficiary, all the banking information as well, the amount to transfer as well. And all this data is universal, pulled in from the original ERP as well. In this, we have our workflow progress. We can see as the QR code scanned and as that payment is sent across via the SWIFT network, we get that email notification as well at the end, letting the buyer and the seller know that the payment's been completed. And then we get verifiable proof, as much as you can with a SWIFT-based transfer. The MT101 file for the transfer itself, and the MT900 file, those are banking files and SWIFT messaging files themselves, showing that the transfer itself has completed with all the specification data there as well. And then if we have, the 1 in 3 people in the world who cannot use these traditional systems, we have blockchain-based systems as well. So instead of setting up a SWIFT-based transfer, we use the same data, pulling all that data from the ERP. We're able to set up a cryptocurrency-based transfer as well, whether it's Bitcoin to Ethereum, setting up the different wallets and conversions as well, transaction fees, everything built in and automated based on the supply chain as required. And then we have verifiable proof as well. We have that transaction hash of the payment that's been completed in crypto, allowing the rest of the supply chain to push ahead. Once again, this cross-border payment, which would release goods, let's say from Canada to the US, as we mentioned before with that Customs Direct implementation, would also use that data to set up a TMS to pick up trucking. Also use that data to set up customs documentation across the border. Also use that data, to set up QR codes for handling points all the way down to the final destination itself, acting as a proof of delivery. And then what is the global impact? Why we want to optimize supply chains around the world? Why is it so important? Of course, we have some great initiatives. INATBA has some great initiatives as well, sustainability. The EU has launched the Green New Deal, which targets 50% CO2 levels by 2030 and net zero by 2050. The EPA has come out with a statistic that over 90% of business greenhouse gas emissions are from their supply chains. And once again, we're looking at supply chains. We're not just looking at your company itself from scope 1, scope 2, and scope 3 as well. Scope 1 is your own company's direct emissions, but you have to be able to take the data from your suppliers, from the retail end as well, all that data has to be brought into the platform, in order to automate cross-border payments, most definitely, but also able to calculate your carbon emissions. So you know where you're emitting more and what you have to offset basically to be net zero. And basically, having all that data pulled in through a platform, a middleware platform like Morpheus. There are other solutions out there as well. We have a carbon emission calculator built into our platform. So any sort of supply chain that's automated with our middleware can also spit out a CO2 emission report as well. Having those numbers so essential to know what we're dealing with in the first place. And how do we do this with our team? We have a very talented team, not speaking about myself, of course, but we have Noah Meppel. He's my partner, my co-founder and COO. We've actually known each other since we were 3 years old, went to nursery school together. He's been in technology for over 20 years. Roger Crook is a part of the team as well. He's the former CEO of DHL Global. And Carl McDermott's our head of business development. He just has a ton of experience in supply chain as well. Very talented guy. He's presenting in a Mexico presentation today as well. And we've won some awards for our great implementations. Pardon the pop-up on the screen there. Not sure why that's there. One award I wanted to focus on specifically was that ASEA award, that PTAC prize for supply chain excellence. Once again, that's for that automated certificate solution that we did with FCL, the third largest retailer in all of Canada. We're very excited about that, of course. We look to keep on growing with our interoperable solutions, pushing and pulling data as needed, creating these great cross-border payments as needed as well. So once again, guys, thank you for taking John. Thank you to Antonio. Thank you to everyone listening. That's all I wanted to share with you today.
Wonderful, Dan. Thank you so much for the presentation, and thank you all to our presenters for their words. So we are coming to a point where we are going to have the panel discussion with our speakers. And also, I wanted to ask you if I wanted to just repeat. You can write your questions in the chat function, or you can raise your hand by which means you can ask the question directly to the speakers or to a particular speaker. Before I hand over to the moderator, to Jan Klesla, I would like to introduce 2 more speakers who are joining the panel discussion. I would like to welcome Tamara Ferreira-Schmidt, who is the Executive Director of the Digital Euro Association. She is specializing in, especially in financial engineering, capital markets, and derivatives. And last but not least, Daniel Segu, the co-founder of CBDC think tank Budapest, and he's focusing on researching innovative wholesale and cross-border CBDC initiatives that are implemented by different DLT platforms. Welcome, everyone. Thank you so much for joining. And I would like to give the floor now to Jan and to start the panel discussion. Thank you.
So good afternoon again, everyone. And thanks for the question already asked. I will have one, let's say, first question. I mean, it's probably not needed to ask if we think that the cross-border payments should be done on blockchain. But let me play the advocatus diaboli for a while. Why blockchain? The question is, why is it better? Just from the very let's say basics point of view, there is a lot of guys saying, okay, all the blockchains are not so efficient, not so great. We can do that on the, let's say, traditional technologies. So if you can just give me just a short answer to kick off this discussion, just maybe 5-10 sentences. Why blockchain? Everyone who wants to start. Okay, John, your presentation was great. You started, so please.
Yeah, I think the short answer is the will of a lot of enterprises are moving towards a DLT infrastructure. I think it's rather than creating or throwing away, what is that? I think the DLT payment, especially when we look at Web3 metaverse in the future, you probably need to make sure that you have the ability to tokenize not just the cash leg, but also your digital asset leg. The short answer is the ability to create interoperability and payment versus payment is key. Because otherwise, if you look at using existing payment rails, you will not be able to sort of settle your digital assets leg as well. So you need to make sure the two marry up.
Thanks a lot. Antonio?
Thank you, Jan. Well, I would add, as John was mentioning, I would add it's the underlying layer that will be for the future. And I think the capability of having traceable and eliminating asymmetry, so everyone can actually see the same information at the same time, I think is going to be key for cross-border payments.
Thank you. Dan, you are smiling and nodding. So
I knew I was next. So anyhow, yeah, thank you for that, John and Antonio. Just directly, as Antonio mentioned, be able to see the data transparently. It creates a level of trust that we just don't have today in supply chains. Even payments, domestic payments, can sometimes take 24 to 48 hours, which is absolutely unbelievable. Not to mention the cost savings that John mentioned, the 7% on average. And that's the middle, right? That's the average. So we have guys in the 20% they're losing on every single transfer, just ridiculous, right? So those are the obvious reasons for it. I do think that connecting, as I mentioned, 31% of the world cannot connect through a bank. That opens up a lot of opportunities for, billions of people. So I think that's a huge advantage as well. Regardless of all those advantages of blockchain, I will say that with Morpheus, we don't push our clients towards a technology by any means. It has to fit for the use case specifically. And in many cases, blockchain is a great use case, of course, a great solution for their problems, but it has to fit basically. So yeah, we don't try to fit a square peg into a round hole, basically.
Great, thanks guys for short and clear answers. Well, Tamara and Daniel, I left you, a little bit behind these three panelists because I got a more complex question for you, not just why blockchain, but we have a question from our auditorium that's, I believe, perfect for you. First is why blockchain, and the second is what ledger specifically for CBDC, or in your case, Tamara, specifically for digital euro. So first, please, if you have something to add to what guys just said, to establish why the blockchain is the best solution, and then specifically if you have any ledger in mind. So maybe lady first, Tamara.
Thank you for the question. I think there is no any specific ledger that it's preferable. We know that the central banks are working and try to find out which it's better. But we know that the CBDCs that were launched were more based on Ethereum. But we don't have data to decide which is the best one. But many central banks and other companies are discussing this right now.
Thanks a lot. Daniel?
Yeah, so, let me just answer the first question, why blockchain? I would say basically, blockchain practically the fastest developed technology on Earth. There's a very huge innovation potential, both from the infrastructure side. It's like, at the moment, it's like zero knowledge rollups or optimistic rollups, what's basically the hottest technology in terms of infrastructure and scaling and privacy, for instance. But there's a very huge innovation on the application side as well, like, just having different token standards. So basically, I think that's the reason why blockchain, because classical message-based systems do not develop so fast, basically. And which ledger is exactly, that's difficult. So from a technological point of view, there are like 3 platforms that are used in terms of distributed ledger technology, in terms of like CBDC. One is R3 Corda, the second is Hyperledger Fabric, and the third one is like Ethereum-based technologies, like, for instance, Hyperledger Bezu, which is basically an Ethereum consortium client. And there are some initiatives with combining these technologies with cross-chain swaps and so on. So which one will win? Honestly, I don't know. I would say, partly these innovations coming from the open blockchain world, and in the open blockchain world at the moment, again, which is gonna be a huge breakthrough. That's this whole roll-up system, which can scale up basically your transaction speed with like 2 grades, and then can provide some more privacy guarantee as well. So that would be the highest topic. But if it's gonna be like RFI Corda or Hyperledger Fabric or like an Ethereum-based stack, honestly, I'm not so sure about at the moment.
Okay, great. Well, we are getting more and more questions on CBDCs. Let me just a little bit come back to especially John and Antonio. Ask, well, once we established that blockchain is probably or most probably the best way to go forward in this area, well, can you tell me what are the costs, especially for the providers of cross-border payments? Well, let's say not just the traditional one, but also for the fintechs providing the traditional services now. So how difficult it is to change the modus operandi? Any one of you?
Yeah, Jan, I can start first. I think when we look at the private permission blockchain at this point in time, I think if you look at some of these being deployed, there has to be a cost, right? The cost is to be shared by a network of participants. As I mentioned earlier, there's no such thing as a free lunch. In order to support infrastructure, you need to ensure that infrastructure can scale, can be upgraded, is up to date. So currently in the payment rails, it's embedded in the fee, because if you look at why are we paying X amount, other than the profit example, there's a sort of an embedded minimum floor that the cost of cross-border payment has to be factored in. Because the problem is once you have a payment that is free, it over time, as is history proven, it's very hard for the whole ecosystem to be maintained up to date, whether from a resilient perspective, AML perspective. So my point here is, if you're doing on a private permission basis, it has to be carefully designed with the right partners, and ensuring that how that cost can be funded or shared, both public and private sector, is key.
Okay, thanks a lot. Antonio, something to add?
Yes. At the end, blockchain will be, as I mentioned before, will be the underlying layer. I think the discussion about which ledger and which type of money will be used, that's going to be something that will be basically, as Adam was mentioning, interoperability. I think as what we try to focus on our proof of concept is that LACchain is basically an infrastructure provider. We're not married, or or like you have to abide by the rules of any kind of ledger. What we're trying to do is establish an infrastructure with different layers, like having a DLT layer, we have an identity layer, and then we have a tokenized money layer that we think, and on top of that, there's going to be side chains and different types of tokens and different types of ledgers. But at the end, it's going to be an infrastructure that's going to be transparent for all of us in a future. And I think that's what we're heading towards. The common goal is being able to have a interoperable infrastructure as today, and having a lot faster, and being able to include all these non-financial users that the world has this opportunity. I think we have a great future ahead of us in terms of financial inclusion.
Well, you mentioned interoperability, and we have a question about the interoperability of CBDCs. So probably Daniel and Tamara can take these questions. So maybe Daniel, you can start this time.
Yeah, sure. So technically, you have many ways of doing like interoperable systems on blockchain tokens. So basically, if you speak about blockchain, CBDC, that's technically a token on the top of your ledger. And then what should be actually guaranteed is like that two different systems can somehow cooperate in a transactional way. And technically, there are many different ways of doing it. I mean, usually the question is if you want to guarantee kind of an atomicity, or if you want to like prevent double spending between two blockchains. And if you want to do something similar, then the two ways is like, one is atomic cross-chain swap, and the second way of doing is that cross-chain tokens. Basically, they are like bridges actually connecting two tokenized blockchains. And there are actually complex frameworks as well, which implement these technologies and aim to connect many different blockchains. That's a hot topic, basically, because I mean, at the moment, the way I see, there are many different blockchain platforms, and actually even for blockchain or distributed ledger and CBDC, there are just more than 3 different approaches. So there might be a risk basically that this CBDC are gonna be fragmented, having like many different island solutions that need to be actually integrated somehow. And yeah, so these are again the technologies. I can give some more technical details if you're interested.
Thank you, Tamara.
Yeah, perhaps I can add that to ensure this interoperability, it's necessary standard structure, and it's involved, of course, specifications and requirements and regulations. And in this sense, maybe the ISO 20022 is used and considered as a way to change this information. It's used globally as a standard to all kinds of financial transactions between institutions, market infrastructures, regulators. So maybe this is a begin to start with this interoperability.
Right, we are getting to a little bit bigger picture here. So back to John, Antonio, and Dan. We are getting questions like basically who's gonna win this this, let's say, quote unquote war between CBDCs and let's say private stablecoins. So maybe back to you, John. What do you think? Is it gonna be some kind of Libra/DM or CBDCs in the end?
Yeah, I think the short answer is if you look at the ECB, the statements, various from Fabio Panetta, president of the ECB, Christine Lagarde, and also in the Federal Reserve Board and the Bank of England, it's very clear the message right now is it's not a one-size-fits-all. So what that means is that they will not, they do not intend for CBDCs to be used for all use cases. The reason is, at this point in time, the regulators do not see themselves using digital money for purposes such as stable coins for staking. Because as you know, CBDCs, most of them do not bear any interest. And I think certainly in a decentralized finance, that certainly is not a space where regulators want to be, because it's a trade-off between privacy, licensing, and regulations, but in area where at this point in time do not pose a financial stability risk. So there are use cases for CBDC, as we mentioned, for wholesale, for interbank payment, for retail, for financial inclusion, as Dan has mentioned. But stablecoin is based on the current construct and purpose today, has its own use cases.
Okay, Antonio?
Yes, I think in the long run, it's going to be as different as we have in the analog world. The digital world will have many options. So it all depends on the use case. Perhaps supply chain will rely on a stable coin, perhaps on the stability of the supply chain, even though a CDBC might be available for different type of transactions in a regulatory environment or in a country as well. So I think the use case will determine the nature of how we tokenize the money and how we use it in the future.
Great, Daniel. What is your take on that? Who's gonna win?
So I would say CBDC and stablecoins are two different things from an economical point of view, because a stablecoin is actually a derivative. So it is pegged somehow to an underlying fiat money, and then which means practically that this peg is always questionable. So it's always an additional risk. For instance, as you might have seen with the Terra Luna flop, for instance. So again, it's like two different things, two different risk factor, I would say. Generally, I have no idea what's going to be the future. I mean, especially it's like regulation and stuff like that. But let me just mention one interesting idea, and that's the idea of putting CBDC into the DeFi space, because as you might have seen with the Terra Luna flop, basically this DeFi space is very much vulnerable for like the stable coins flops. So the idea is that instead of stable coins, let we just use basically CBDC in DeFi, which makes the whole DeFi ecosystem more stable. And basically, it might be actually a way of introducing regulation into the DeFi space as well. It's a pretty innovative idea, so it's not a mainstream one, but I mean, there are some brainstorming in this direction as well.
Well, let me move to Dan, and we have a specific question about the security, and let me expand a little bit this question about the privacy of the Morpheus network. So Dan.
Great, pardon me. Great question there, and it makes sense because we have so many different third-party integrations. We have over 200 different integrations, so data come from different places. How do you trust the data that we're receiving, right? So different solutions for this, and you want to take advantage of the trust aspect of blockchain, obviously. So we've built as a parallel system, we call it our trust layer node network. We have a bunch of nodes which receive the data that also our middleware receives. Notarizes the data in a decentralized fashion, and then we can match up the data that we've received as well. So in this example, there's asked about Oracle specifically, right? So let's say an Oracle implementation, and then in the ERP of, let's say, the two different parties, the ERP is showing different data, or alternatively, our middleware is showing different data than the ERP. We can always go back directly to that decentralized node network and verify how the data was originally, and it can't be changed. It takes advantage of the immutability of blockchain as well, and also that once the data is written there, it can't be changed. So there is that security level as well. Privacy, we mentioned some permission chains, permission data. If there's sensitive data, we can use encryption methods as well. I mentioned that PAPS number, for example, for a customs border clearance. That can't be a public number, just a hash of that number relating to what that PAPS number is, allowing the border clearance to happen. So only Customs Border Protection sees that PAPS. It's not available to the whole world, basically.
Yeah, thanks. Tamara, well, another question is more about the privacy and privacy concerns about the CBDC, sorry. What about the digital euro, and what about your take on that? Be like China-like, nightmare, or are we going to keep our European, let's say, approach to keep and our values to keep the privacy, etc., etc.? Or is it going to be a GDPR nightmare?
Yeah, it's really important to think in this design recommendation. So we believe that a CBDC should provide the highest degree of privacy. And in this context, a CBDC should supply technically guaranteed privacy by design and by default, without the need to trust the central bank to preserve privacy. And should be utilized ideally by anonymous payment for small and medium sized transactions. So it's completely possible to do this from the technology, and we of course believe that should have the highest degree of privacy.
Thanks. Maybe Daniel, in general about CBDCs.
General about CBDCs or privacy and CBDCs.
Yep.
Yeah. So let me just answer this privacy. So privacy is actually one of the key topics in CBDC design. I would say it is more for retail CBDC. So if you speak about like wholesale CBDC or wholesale cross-border, then the situation might be a little bit simpler or easier. But yeah, if it is retail, then absolutely that's a hot topic. And it's important to note, so from a technical point of view, you can design system with cash-like privacy. Like if you just take like Monero or Dash, these are cryptocurrency systems having cash-like privacy properties. So technically it's possible to design. It's the question if it is desirable, or if it is liked by governments and central banks. As you see, for instance, as far as I know, the Chinese CBDC has a pretty good privacy properties. It's just only that there are some organizations who see basically everything, which is, I mean, it's up to the people if that's acceptable or not. I'm not sure if something similar will be accepted in Europe, for instance. But let me just mention one direction, which is very much in research direction. So theoretically, you might as well use some very advanced cryptography to guarantee privacy, but despite guarantee kind of an AML regulations. And that's like, for instance, zero knowledge proofs or functional or homomorphic encryptions. So theoretically, and it's very much a research topic, you can have privacy, but despite you can make sure that, for instance, certain AML rules are set without actually leaking the data itself.
Thank you. Thanks a lot. We have a very specific question about the Silvergate Exchange Network in the United States. I'm not sure if anyone is familiar with that, and if so, if you can answer this question. It was mentioned for John or Tamara, but anyone, if you're familiar with the network, please.
Sorry, I'm not aware with this network.
Yeah, I don't think they have a lot of public available information other than the use case. So apologies, we don't have enough information on Silvergate Exchange Network. Yeah,
it's the same case with me. I have to admit. Sorry. Well, but we will definitely look into that in INATBA. Actually, I wanted to ask you, John, one of the more general questions here, and we have a, let's say, question from one of the guys, let's say, from startups, and let me make it a little bit more general. Just imagine you are a startup CEO. You are providing like fintech services, and there's FX involved. Maybe even focus on FX. Where would you start? What is the ecosystem or platform you would go to explore more, like the CBDCs and basically in general blockchain for cross-border payments?
I think that the tech stack itself, being a tech provider, alone, without being involved in the actual distribution or transfer of money, is perhaps the easiest way to start. Because I think the world of handling payments, whether digital payments or the normal fiat payment, will be quite expensive. The reason why I say this is, as we speak, there is a prudential treatment of crypto asset exposure, including for purposes of use of payment. So Basel is about to finalize its position early next year. So when that comes, if the infrastructure add-on costs in the second consultation is actually approved, what that means is the deployment of DLT comes with it a cost. So I think the question now is to make sure that if you want to stay, and if you're not well capitalized, I think the starting point is providing the tech stack alone, it's fine. But when we actually want to be party to the ecosystem, whether as a financial intermediaries in some form or fashion, there will be a cost that needs to be carried in the balance sheet. So I just want parties to be aware of that sort of direction of travel.
Okay, thanks a lot. Well, let me come back to Tamara and maybe even the others. Well, there are questions in Europe actually if the digital euro should be really based on cryptocurrencies or blockchain. And let me ask you first this question, and then I will ask other guys if there is any possibility to, let's say, for the central banks, like to provide CBDCs on blockchain and on traditional technologies, and how this can work together. But first, Tamara, what do you think? Is there any future of digital euro without blockchain?
So the ECB now is running the investigation phase and is trying to know about all the technologies that it's available to build the digital euro. And of course that blockchain, it's a possibility. But we have two different kinds of blockchains, right? Permissionless and the other. But I think this, in my personal opinion, I think it would be a closed blockchain. Yeah.
Okay, thank you. Well, so let me repeat the question for everyone. How this can work together? Let's imagine one central bank using blockchain, another one, using traditional technology. So in the beginning, we established that blockchain is the way to go, but I'm pretty sure that there will be central banks, maybe even the ECB, we don't know yet, as Tamara just said, not using blockchain technology. So how can this work together? Maybe we can start with, I don't know, maybe done.
Hey, listen, it goes back to my comment about interoperability, right? Whether it's different IT systems, ERPs speaking to each other, if we're talking about different banks, different payment systems, obviously there's going to be some conversions down the road as well that need to happen if we're talking about a crypto to a banking sort of system that have to speak to each other, legacy and then crypto. I will say that for myself, I'm more of a supply chain specialist. So I'm sort of giving you my speculation as to what I think would happen down the road. But I think John gave some great solutions there with atomic swaps, going into stables, and so on, right down to the legacy systems as well. But it will take some conversions, which I do think would still be a lot more cost effective than the legacy systems that we're converting right now, going through intermediary banks, as John also had mentioned before. So,
yeah, John.
I think if you look at what's happening right now, like SWIFT, for example, they are just did a trial tokenization interoperability with Settle, Clearstream, Northern Trust. Precisely to your point, they now realize that the ideal world, if we talk about DLT, but rather than create silos or walled garden, I think the thing is, in order to speed to market, what SWIFT is doing is basically to allow for standardization and messaging. And also some of them are actually providing sort of custody services to handle cash or dematerialize those. So I think there would be some sort of a hybrid solution rather than a one-size-fits-all. It's not going to be a case of DLT or nothing. As we speak, some of these big platforms are already thinking of multiple platforms or multiple infrastructure. But the key point, as Dan mentioned, is how do they speak to each other? How do they interoperate? Right? Some of them are looking at a model where you use a bridge, blockchain bridge, but some of them are also looking at using a combination of traditional systems and new systems, but having an intermediary in between that reconcile the two systems so that they can message and exchange data and records at the same time.
And Antonio, what's your take?
Yes, I agree. It's going to be a hybrid system. We're working actually, as I mentioned, our next steps is having what would be a retail network and having whatever, even if it's a traditional network, and having a blockchain-based network. And then we would have a settlement, would have a bridge for interoperability. Even it could be among tokens or among any kind of transactions that would take place on blockchain. So I think that's going to narrow down to having, or even it's a blockchain-based, all blockchain-based solution, or it's going to be a hybrid where settlement can take place on different kind of types of networks.
Great, and Daniel.
Yeah, so actually the way I see, I mean, if I just see the different CBDC initiatives, there are like at least 6 or 8 different technologies that is brainstormed. Again, just from the distributed ledger part, you get like at least 3 different blockchains or distributed ledgers that is used, and that at least like 3 more or 4 more different message-based systems. So interoperability will be surely an issue. Just one comment, basically, it's an issue in blockchain as well. So you find general purpose interoperability frameworks already. It's like Hyperledger Cactus, for instance, for a consortium blockchain world. It's like Tendermint or Cosmos, for instance, in a public blockchain world. So these things appear slowly. It's just they are not so much developed, for instance, as a message-based payment system, for instance. So that's one thing. The second thing, what might help is basically having like kind of a standardization, at least for system interoperability. It's like, for instance, the ISO 20020 for banking messages, but something similar, even if it's not so much an official standard, just a de facto standard for different CBDC cooperation or or working that might help actually in this field as well.
Well, guys, thanks a lot. I mean, we started and ended with let's say outlining this space. There's much more to discuss, I'm pretty sure. However, our time is up. We can see Bara again. That means that it's time for closing remarks. Before that, I would love to encourage you to let's say reach to INATBA if you are interested in this space. This is first, definitely not last opportunity to discuss this. And let's say if there is enough interest, we will be more active in this space in the near future. Also, we can and we want to focus on the specific issues discussed today: interoperability, standardization, proprietary and non-proprietary systems, private versus private stablecoins versus CBDCs, and of course the regulation of everything. Well, thanks a lot. Thank you guys. Thanks a lot for joining. And Bara, back to you.
Thank you so much, Jan. On behalf of INATBA, I would just like to thank everyone, the speakers, and also the audience for the questions. And for the final remarks, I would like to give the floor to our partner, the European Blockchain Observatory and Forum, to close the session. Thank you so much, everyone.
Thank you, Bara. I would also like to thank all the panelists, presenters, and Jan for the moderation, and you, Bara, for hosting the workshop today. Thank you to all the participants for attending and for the very interesting questions that were posed. We have tried to address almost everything, but we will follow up with a report summing up most of the highlights and conclusions, both from the presentations and from the discussion. As mentioned in the chat and as asked by several of the participants, this session is recorded and will be shared with you. The same will apply for the presentations that the presenters wish to share. So we will follow up by email. You can follow also our websites, INATBA's and UBUF's, and we can share more information there. We're happy to answer any questions in the contact details that you may find here. And again, thank you very much for this fruitful session.
Thank you, Bara.
Thank you, everyone. Have a nice rest of the day.
Thank you,
Bye.
Bara. Thank you,
Thanks a
Jan.
lot.
Thank you, everyone. Hey, thanks, Dan, John. See you around.